It's time for another pivotal earnings call for PayPal stock. And no, I'm not trying to be dramatic or anything else like that. But when you have a new management team come in and turn everything upside down, the first few earnings calls are massive to setting the tone on, can this management team actually do what they say, or are they just all complete talk and the company is going nowhere and their plan is going to fail? So let's talk about the top 3 things I'm looking for on this earnings. And there's one giant concern with PayPal that I do have on this earnings as well that we'll talk about. And of course, I'll give you my complete plan for if I'm going to add more PayPal or not to my various portfolios that I have out there, because I don't know, the portfolios just keep growing, guys. Just make sure you like the video if you like getting the truth without the hype, and if you like kind of earnings previews like this. Let me know down in the comments if you guys like these or not. All right, so we'll start with the big concern first there, because I just kind of want to get it out of the way. Then we'll talk about the top 3 things that I'm looking for on this earnings, and of course, my plan after that with PayPal stock. And it's different than my SoFi plan, guys. So, check that video up there if you want to see exactly what my plan is with SoFi, my earnings thoughts there. But it's going to be different than that, so we need to talk about that as well. So what is my big concern with PayPal? Now, this isn't a concern that I just have right now for PayPal. It's actually a concern that I have that we're going to see basically really for the next year or so, I think, and that is Wall Street being short-sighted and focusing far too much on customer count in regards to PayPal. I know in the past, that's exactly what the old management team focused on, was growing customer growth at all costs, customer count at all costs. That's exactly what they were trying to do. And that right there was kind of the metric that they focused on. But we heard from this management team, hey, we're not going to do that. We want quality customers, not customers that just take the one-time deal, use PayPal once to get the one-time whatever, you basically loss leader in order to get them into the PayPal system. And then they never come back and use PayPal again. They're getting rid of all that, which means you're going to see customer counts fluctuate a lot as they kind of move certain products out and replace it with higher tier products that the users use multiple times or use multiple products within that particular tier as well. So as they kind of shift that business, you're going to see customer count fluctuate a lot, be flat, maybe even go down at some point in time. And if Wall Street just lasers in on that and ignores everything else that's going on, that's a concern in the short term for the stock. Now, long term, will it matter? No, of course not. You turn that EPS around, you start seeing massive EPS growth, you start seeing massive revenue growth kick off, and it's going to change that narrative. But in the short term, if they choose to just focus on customer count and use that to drag it down, that could absolutely hurt us in the short term in regards to PayPal. So it's just, I don't know, Wall Street's dumb. You guys know that. We've seen it this earnings so far with just the ridiculous movements on great earnings and terrible earnings and everything in between like that. Hasn't made any sense. So I don't expect Wall Street to make any sense out of any of that either. So it's just, that's my concern. I wanted you guys to understand my concern as well with PayPal. But let's jump over to the 3 things that I'm really looking for, the top 3 that I'm looking for on this earnings and where I'm kind of focusing in addition to that, customer count there and Wall Street's reaction to it. But in addition to that, let's talk about the next 3. Number 1, will the turnaround be complete this year? Basically, they told us this was the year to turn everything around. Are they on track for that or not? We have to know that. We have to see, is the roadmap that they laid out for us, basically whenever Alex Chris took over, is that roadmap on track? Are we moving in the right direction? We obviously, last quarter, pretty easy to kind of see. There was some shuffling, some other things going on here, but this is our first real quarter here in the year where we kind of see, are we tracking? Are we on line to hit those goals and be complete with this turnaround by the end of the year? Now, that doesn't mean everything's booming and highly profitable and everything else like that by the end of the year. Just, is the transition on track to be complete by the end of the year? That is a big question that needs to be answered, and it's definitely something Wall Street's going to be paying attention to. And of course, I'm going to be paying a lot of attention to it as well, because I want to see that, because that will tell me a lot about how the repricing is going to go, and more importantly, how the stock price is going to move over the next few quarters, depending upon what they say. So definitely pay attention to that. Number 2, what is the impact of getting rid of low profit offerings? So basically what we want to hear is, what is the impact of cutting those low price, those low profit offerings? Have they actually started yet? And if so, what is the impact on the bottom line there? They've got to make sure that they break that out in this earnings and give us specifics about what's going on there. Because if you kind of leave it kind of ambiguous, it kind of makes it sound like, or it can be misconstrued as, it's not on track. It didn't go well. There wasn't, there was problems with what's going on. And they can tell us that. Like, was there any pushback cutting back on these low price offerings? Were there pushback from the vendors, from the other partnerships that you have out there? What exactly is the impact of actually executing the vision that Alex laid out? Which part of that was getting rid of those low profit margin offerings that they have out there. Are we done cutting all of those low price offerings, or is there actually more of them to cut? And kind of what is the plan specifically for getting that all the way down, getting rid of all of them? Basically you plan on getting rid of all the low cost offerings. Is it done this quarter? Is it going to be done next quarter? Is it not going to be done till the end of the year? And there's like a, kind of like basically a flow chart to getting rid of them all. That all needs to be laid out here in this earnings, because we need to know where we kind of stand with that. So it makes it easier to judge what the numbers are and how effective getting rid of those were. And then also how effective the new offerings are that they're starting to implement, which I guess that right there could kind of be, that right there was 2A. 2B is how are those new offerings coming along? Those big, shock the world, whenever he gave that presentation, all those things that they put in that presentation, where are we at in the implementation of all of those? Where is that lying? What is the roadmap for that? Are we still on track with that? I know I kind of said that right there in the first one, but specifically with those products, are we starting to see impacts to the bottom line or not? And when do they expect to see impacts to the bottom line or not? That right there will kind of be to be per se with this particular earnings and with this particular point. So we need the status update on all of that. So on to the last thing that I'm looking for, and it's the biggest one because it's going to determine the stock price in the short term, of course the long term, but in the short term, it's really going to determine how quickly up or down this stock moves, or if we kind of continue our steady state that we've been on here as we've been moving forward, which we've actually been discussing this specifically along with listening to earnings calls. We just listened to Tesla's earnings calls, breaking those down, and a ton more in my group, which of course is on sale right now because we got the $250 legacy portfolio challenge going on, where I'm basically going to start from zero and just using $250 a week, build out a 6-figure and beyond portfolio. So check out the pinned comment down there because you can be a part of that portfolio challenge, or you can be a part of our group and be a part of all these earnings discussions, be able to ask me questions anytime you want, take 5 free courses, take advantage of the free coaching that we have, where we have coaching on earnings calls, how to read those, how to read the financials, everything else, guys. We got special $15 founders pricing for the $250 challenge, and a full membership is on sale as well. So just check out the pinned comment down there and see if a membership's right for you. All right, so on to the last point, which again is the biggest point, and that is EPS guidance on course or better? Alex has preached that is his main focus. That is his primary focus with everything that they're doing, is moving that EPS forward, making it larger, becoming more profitable. So we need to know, are we on track with that mission, or are we ahead of schedule, which of course would be a huge boon to the stock price there, or are we behind, which of course would have the exact opposite effect. This is one that Wall Street is watching the most. They want profits. They want them now. I'm not sure we're going to get them right now. I really don't think that we will, but some positive commentary, some good guidance, heck, even a readjustment and guidance up would be a huge, huge win for us as PayPal shareholders. And we've already seen some appreciation in the share price from the low. So it's not like we haven't been on a nice little run quietly. We've been on a lot better run than a lot of other stocks that everybody else loves so far this year. So we've quietly kind of been creeping up. That could definitely kick that move into overdrive there. If he gives us a readjustment and guidance to the upside, that would be a huge boon for us as shareholders there, and really kind of send us on a little bit of a wild ride there, because I think you will start to see, if that's the case, Wall Street really starting to get behind the stock. Now, not like, oh my gosh, it's going to go on a meta style run and, triple up in a year or whatever the case is. I don't think that far ahead. I don't get too excited about that. But if we could get up in the upper 60s, maybe even break that 70 level and hold it, that right there would be a huge win for us to start looking at making that next leg up. And a lot of things will start to line up for us from a technical perspective. And of course, it's also not just technical, but then you have fundamentals underneath also lining up. That is exactly how you get a big run in a stock, is when both of them line up perfectly. I'm not saying we're there yet, but you can see things start lining up to get us there if they come in with great EPS guidance, or, obviously a beaten EPS. And then of course, guidance further pushing that up higher, basically readjusting that guidance up. That is the exact setup you want to see whenever you have a stock that's been beaten down for so long and it's looking to make those next legs ups. That's exactly what needs to happen. So what is my plan for PayPal stock? So like I said, my plan here with PayPal is different than what my plan is with SoFi, because I own so much PayPal. It has been beaten down for such a long time, a lot longer than SoFi has. And it's just, I have a ton of it. I don't really need it anymore. And I've added recently to it. I don't really need any more, but I did start this $250 portfolio challenge that we have there. And, obviously check that out if you want to see if I was building a new portfolio from scratch, would I add PayPal or not? You can see exactly what I would or wouldn't do right there. So make sure you check that out there. But when I look at my main portfolios, all the big dogs that I have there, and I'm looking out, I don't really see a reason to add any more at this stage. Yes, it's still significantly undervalued in my opinion, and I might add a little bit more, but it's not something I'm looking to add because I think because we've seen a lot of other stocks fall now, I think there's maybe better opportunities in other stocks that I wasn't getting an opportunity in prior. And that's why I was batting, basically taking what the market gives me per se. That's exactly why I always say take what the market gives you. Back 6 months ago, it was only giving me PayPal. That was about it. It seemed like that's all I could buy was PayPal. It was the only thing dipping. And now we've kind of switched a little bit. A lot of other nice stocks are dipping down and getting into that undervalued territory. So I can afford to kind of switch my focus over to other stocks. So for me, I might nibble on a little bit more, but I really don't have any reason to at this stage because there's other deals out there that I want to buy. And remember, if you want to see the $250 portfolio challenge buys, or you want access to all of my buys and all of my portfolios and our expert investors who are also taking the $250 challenge with me, make sure you check out the pinned comment down there for our membership for my group, where you get access to all of that if you become a full member. You can take 5 courses for free, use the stock analyzer tool for free, be a part of our free coaching, take advantage of the best 6, 7, and 8-figure Discord out there, all helping you become a better investor. Just check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.